Morning, Steve Free in Chicago with the morning grain comments. Markets are mixed overnight. Beans, corn unchanged, well, wheat's a little bit lower. July beans are trading around 16.93. Overnight high was 17.05. July corn 8.06. The overnight high was 8.14. And July Kansas City wheat's trading 11.85. And the overnight high was 12.02. Got stocks kind of mixed, dollars higher. Crude's lower. Gold, silver, copper, coffee, sugar, cotton are all lower. I think in the grain markets, one of the things that we're looking at closely is market composition. Yesterday, there was some concern in the wheat market that managed funds were seeing an increase in value at risk, which means that the prices are quite a bit higher than where value might be, and that some of the fund managers might be reducing some of their net positions as to reduce risk. That could filter into the corn market, where the funds are long almost 400,000 contracts, and market seems to be a little bit overbought. RSIs are high, but open interest continues to increase. So until open interest starts declining, the corn market could still turn higher and trade higher, despite the fact it's overbought. As far as news overnight, yesterday, bean, corn, and wheat export shipments to date are still behind a year ago. The trade's waiting to see if China comes in and buys U.S. beans August forward, where we're the most competitive. And we'll be watching pretty closely impact COVID lockdowns and their slower economy has on imports of commodities. Over in the corn market, a lot of things are friendly. We could see increased exports because of the Ukraine war escalating. We could also see the fact that wheat prices rallying domestically could increase corn feed usage. And we also could see increase in ethanol usage and ethanol exports as margins improve. So all that is friendly to the corn market. But again, are we overbought as of April 19th, and do we need a correction? Over in the beans, I think, over in the wheat market, I think that the market, number one, added a lot of weather premium and war premium yesterday. We're trying to take a little bit of that off today. USDA did lower winter wheat crop ratings 2 percentage points, and the lowest since 1996. The weather down there looks to be mostly warm and dry over the next 2 weeks. In the northern plains, all the recent heavy snow is slowing the plantings of spring crops there in North Dakota and also in Canada. We're not quite sure as to how long this will continue, but it might be until mid-May until some farmers get into the fields up there. Still plenty of time to plant the crop, but there would be some concerns during this delay about what the final yields are going to be. We also note that the U.S. corn crop is being planted late, and we'll have to see if that affects the corn yield. Some people are ruling out a record yield because the crop may get planted late. The second week of the forecast, though, looks warm and dry, so farmers should be getting in the fields then. So we'll be watching inflation. We'll be watching anything out of Washington concerning biofuels, and we'll be watching the war for impact it has on commodity prices. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.